Hey everyone, welcome back to Corporate Decoder. Today we're diving into a document that's drier than a desert but hides a secret. CNH Industrial, the company that makes tractors and construction equipment, just made a move with a huge pile of money. We're going to see if they're planting seeds for growth or digging themselves a hole. This report is like a snapshot from March 2025. It's called an 8K, and companies use it to tell investors about big changes that could affect their stock. The big news here is about a credit line. CNH Industrial and Citibank agreed to push back the due date on a massive 325 billion euros or close to $4 billion US dollars. Instead of having to pay it back soon, they now have until April 2030. This is called the Credit Agreement Amendment. Basically, they got an extension on their loan. Why does this matter? Well, imagine you have a credit card bill coming up, but you can't quite pay it. Getting the due date moved back gives you more breathing room. For a company like CNH, this means they have more time to use that money for other things, like investing in new products or paying off other debts. It avoids some immediate risk of going into financial problems. Now, this report also mentions something called a direct financial obligation. That sounds scary, but it just means CNH is responsible for paying back this loan. The important part is that as of the date of this agreement, they haven't actually borrowed any money from this credit line. It's like having a safety net in place. CNH can borrow money from this credit line whenever they need it, and they can also pay it back whenever they want. It gives them flexibility. Finally, the report lists a couple of exhibits or attachments. One is the actual agreement that was signed, and the other is a digital file. Nothing too exciting for us here. Now let's zoom out and see what this all means. Giving themselves extra time to repay a large debt can be good and bad. It gives them flexibility if something unexpected happens, like a drop in sales or a major economic downturn. It can also free up cash they have to invest in new products or to pay back another loan they owe. On the other hand, extending a debt also means that it can create other problems. If they're struggling to make payments later on, or it simply means they are kicking the can further down the road, they may be paying a higher interest rate by delaying the payment, which makes it harder to pay off later. It also makes them dependent on the bank who is lending them this money. Is CNH a company that's steering towards success or facing a bumpy road ahead? It's hard to say for sure without digging deeper into their overall financial situation. We didn't see many numbers here, but it's an important move they made. Thanks for watching. If you found this breakdown helpful, please hit that like button, leave a comment and subscribe for more corporate deep dives.